Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, we had a nice rally across the board here, and in fact, oh man, we got so close to Dow 20,000, mere ticks away. I'll show you guys on the charts in just a second, but S&Ps were positive, the Nasdaq posting new all-time highs. And here's something interesting that we saw is that all throughout the dynamic on Friday, we saw the Russell kind of leading the way to the downside, kind of being a drag on the performance from the larger Nasdaq and the S&P stocks. So maybe we're seeing a little bit of rotation out of those high-flying small caps. We saw the crude kind of settling in, basically unchanged. Gold backing off just a little bit, in the bonds on the back of the non-farm payroll numbers. The bonds were selling off as well, pushing the yields higher. So we'll see all of this on the charts. And as always, we're starting off our analysis here with the S&P 5. So S&P 500, new all-time closing high, ladies and gentlemen. Here we are. We posted up into a close of 2276, almost 2277s. We did at one point during the day get up to the a high of 2282s. And then backing off towards the close, but here we are. And we had mentioned this as well over the prior few videos that we've done, the market trend review videos. We were saying that there's these highs right across the 2275s, and as we came back from the new year after the holiday trade, we noticed that we had a nice pop running right into this. And one of the comments I had made on a prior video is, over the next 2 days, and this was back on Wednesday, over the next 2 days, meaning Thursday, Friday, what wouldn't surprise me is that you would take a little bit of a breather, go sideways, consolidate some of that move you had on the 3rd and the 4th of January, and then try and attempt a breakout up and over those previous highs. And that's exactly what happened here. So folks, as we take a look at these S&P 500s, now the critical place for us to maintain at this point is trying to stay above this breakout level. So like if you broke out and then over the next 2-3 days you faded right back down into this range, there's going to be something that feels a little off about this breakout, right? That's in the case that you can't hold these levels, these higher levels. But at this point, with prices breaking to new highs, it would suggest that there is demand for some of the stocks out there, and we'll see which stocks the money's somewhat rotating into at this point. But that's one of the areas to watch for, is now the breakout level right around the 2275s. Obviously, it's still going to be good for us to try and hold these 2230s in case any sort of a pullback materializes. And then bigger picture, what I'm looking at here on a larger chart is the ability to stay above these 2215s, which are really close to the 2200 whole number. And now you've got your 50-day moving average right in that vicinity. So folks, as we start to break out here, it's going to be important that we build another leg higher and extend upon these gains. Now, as we take a look at the Nasdaq here, moving over to the Nas, we saw the Nas also posting up into new all-time highs, breaching the 5,500 whole number. And part of the reason this is happening is, as we've mentioned in prior videos, we've been talking about how some of the larger cap tech names were lagging behind, namely Amazon and Facebook. And we also mentioned on some of those larger names some of the key areas that might cause the Nasdaq to get a lift. So on Amazon, we were looking at this descending trend line, and I was saying, you know, once the descending trend line breaks, you might have kind of like a building of momentum, and to watch for a break up and over the 790s. That's exactly what we did, folks. We got above the 50-day average on Amazon. So while this is not a breakout per se from just in terms of general health of the market, what I think this allows the Amazon to start doing now is start building the right side of a base, where maybe then it forms later on the road like a cup and handle or some other recognizable basing pattern. But this is that first lift off to try and attempt a right side of a base. So continue watching Amazon. It wouldn't surprise me that the base starts to look pretty good right around when they're going to be reporting earnings. That's another thing, is we're entering into the early parts of the earnings season. If we take a look at the Facebook, same thing with the Facebook. We were looking at these descending trend lines in our trading room, and I was mentioning to the traders, if you can get above like these 122s right here, these prior series of highs, then not only would it probably build a little momentum, but it's going to allow the Facebook as well to maybe start forming the right side of a base, which ultimately will start bringing the Nasdaq back. Now, another thing that we did see here is if you take a look at Alphabet or Google, nice breakout. We've been watching this here. We talked about a cup and handle. Google is breaking out. This is going to be potentially all-time highs if it can take out this high here from 839. 839 is the all-time high on Google, or Alphabet as it's now called, and we staged a nice breakout. Volume was a little lacking. We would have liked to have seen more volume, but folks, overall what we got the sense of today is that the big caps were attracting the money. We saw that lift the entire indice up here, even like Apple, right, looking like it's trying to break out of this cup and handle we've mentioned on prior videos. So continue watching this, folks. We could be seeing at this point a bit of rotation from some of the smaller cap, the financials that have had a huge run since the post-election, the Trump election. We might see a little bit of that kind of trickling back into the larger cap techs, as maybe the valuations in smaller cap names or financials have gotten a little ahead of themselves, and the tech still has great valuations. You might see some fund managers rebalancing at the start of the year. But folks, whatever it is, just watch the charts, take each day one day at a time. Now, as we move over to some of our external markets, just quickly covering some of the futures here, we saw the crude trading right around the 54s, closing out a very strong week. So again, we're going to continue watching to see if the crude can stay above the 52 evens. That'll represent trying to maintain this breakout from this kind of like an inverted head and shoulders that we've been watching for quite some time now. Taking a look at the bonds came off on the back of the non-farm payrolls. So we had mentioned how this bounced off of some really long-term support going all the way back to 2012 and 13. But one of the things I had mentioned in our room and in prior videos is that my expectation at this point is maybe just a little bit of a range bound trade, or some of like a little bit of a balance to build at this level. And then if the Fed continues on its rate hike path, any sort of break below 123s, and I think that sends the bonds lower and 10-year yields higher. And then finally here, the gold kind of backing off. We're watching the gold for potentially a spike up in a test of the 1200s. So far that has not materialized. We're looking at some prior lows in here, or resistance points rather. We did spike above them intra-week, and then we're kind of backing off to them. But folks, I would expect some resistance to start building right around these 1200s. You can see here that's the support level, support level, support level. Even came in support level right here before a couple of days later you broke it. Became resistance when you bounce back up, and then you form this big sell-off. So if you have any sort of a retracement, or a short cover rally, or whatever you want to call it, I would expect some resistance to start forming as you approach the 1200s. That's a prior area of interest to watch. So folks, as we continue out throughout the next few weeks, keep in mind that earnings are going to start ramping up, and in fact JP Morgan is going to get it started here with all the financials. Alcoa as well is going to get everything started on Monday. So as we take a look at our stocks and any positions you might have, be cognizant of when these earnings are going to be reported. Remember, earnings can be volatile both ways, up 20%, down 20%. A lot of times the move is unexpected. Revenues are great, earnings are great, the stock is down 10%, right? Doesn't make sense. So main thing here is to control your risk going in through earnings. For a lot of us at the Easy Breakouts, we tend to go flat through earnings. We don't like to hold through it, just to reduce and eliminate that volatility and that risk. But folks, if you're trading through the earnings, just be careful. Know when they're coming out, know when they're going to be reporting. And other than that, folks, have a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.